Everyone loves the Nasdaq 100. It's where the tech giants live. But what if you could earn over 10% income from that same Nasdaq portfolio, paid monthly, without chasing risky dividend stocks? Enter the JPMorgan Nasdaq Equity Premium Income ETF, ticker JPQ. It's one of the fastest growing ETFs on the market, with over $30 billion in assets and a yield that has income investors drooling. JEPQ launched in May 2022, and it's part of JPMorgan's Equity Premium family. Think of it as the Nasdaq cousin to JEPI, which tracks the S&P 500. But here's the twist. JEPQ doesn't just hold stocks. It also sells covered calls on the Nasdaq 100 through something called ELNs, equity-linked notes. That options overlay brings in cash, income that's passed along to you as monthly dividends. The fund's expense ratio is a moderate 0.35%, and it currently holds 107 positions, almost half of them concentrated in the big tech Magnificent Seven. As of October 17, 2025, JEPQ closed at $57.48, just below its 52-week high of $58.54. Its dividend yield sits around 10.4%, with $5.98 in trailing 12-month payouts. And here's the kicker. Those payouts come every single month. Recent payments. October 1st, $0.446 per share. September 2nd, $0.442. August 1st, $0.444. So yes, it's consistent. But the payout ratio? A jaw-dropping 368%. That's because much of the income comes from option premiums, not pure company earnings. Since inception, JEPQ has returned an average of 16.1% per year, and over the past 12 months, it's up 16.8%, dividends included. That's not bad for a fund designed primarily for income generation. Its beta is just 0.85, meaning it's a bit less volatile than the Nasdaq itself, thanks to those covered calls cushioning market swings. But keep in mind, that same strategy also caps upside. If the Nasdaq rips higher, JEPQ won't fully participate. The calls limit the capital appreciation in exchange for that juicy monthly cash flow. So what's actually inside this yield machine? The top 10 holdings make up nearly half the portfolio. NVIDIA, 8.3%. Microsoft, 7%. Apple, 6.9%. Alphabet, 4.9%. Broadcom, 4.7%. Amazon, 4.3%. Meta, 3.1%. Tesla, 2.8%. Netflix, 2.5%. AMD, 1.9%. In other words, it's a who's who of AI, cloud, and semiconductor dominance. The fund's exposure to the Nasdaq 100 makes it naturally growth-heavy, but the option income gives it a defensive tilt. Investors often compare JEPQ versus QQQ and JEPQ versus GPIQ, Goldman Sachs' rival premium income ETF. QQQ is pure growth, zero income enhancement, full market exposure. GPIQ has outperformed recently due to a more tactical option strategy. JEPQ sits in the middle. Consistent income, moderate growth, less volatility. In short, if you want to own tech but also sleep at night while collecting checks, JEPQ delivers that balance. Still, critics argue that covered call ETFs structurally cap upside, meaning they might underperform long-term growth strategies like simply holding QQQ or QLD. Before you dive in for those 10% yields, remember, this isn't a magic income faucet. When markets fall, covered call income can soften the blow, but your NAV still drops. When markets surge, you miss out on some gains. And those fat yields? They fluctuate with volatility. Calm markets mean smaller premiums. Also, the fund's high payout ratio doesn't mean it's unsustainable, but it does highlight that distributions depend on option income, not dividends from the companies themselves. JEPQ is tailor-made for income-focused investors tired of low bond yields, retirees who crave monthly cash flow, dividend growth investors looking to diversify. It's less suited for pure growth chasers, taxable accounts, since option premiums are often short-term income. anyone who hates complexity, because, yes, options are involved even if you don't see them. With AI still driving the Nasdaq and rate cut expectations favoring equities, JPQ could stay strong into 2026. Analysts from Seeking Alpha recently upgraded JPQ to strong buy, citing its tech-heavy portfolio, income stability, and a favorable macro backdrop. But if rate volatility drops, expect those dividends to dip as well. That's just how covered call math works. So, is JPQ the holy grail of high-yield ETFs, or just the latest income fad? Maybe both. But in a world where investors chase every extra percentage point, a 10% yield for Nasdaq giants is hard to ignore. If you enjoyed this breakdown, hit that like button, subscribe for more dividend deep dives, and drop a comment. Are you holding JPQ or sticking with QQQ? Thanks for watching, and remember, steady income beats shaky speculation every time.